The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 26th terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call Wisdom is Born of Mistakes. Confront error and learn. You know, many years ago, Norman Cousins said, fortunately or otherwise, we live at a time when the average individual has to know several times as much in order to keep informed as he or she did only 30 or 40 years ago. Well, folks, that is an understatement, because being educated today requires not only more than a superficial knowledge of the arts and sciences, but a sense of the interrelationship of the two, something only taught in the school of hard knocks. In short, education is required for survival. Now, there's a huge difference between acquiring knowledge and possessing wisdom. We can acquire knowledge through universities, travels, relationships, books. Hey, the Tiger's Den, TigerTV. But the question is, are we gaining wisdom? The question is, does wisdom come from knowledge, or does wisdom come from learning from our mistakes? Maria Montessori called mistakes learning opportunities. How would that change your life, folks, if you've made mistakes and instead of calling them mistakes, you call them learning opportunities? Something to think about. To become wise, here's the key. We must suspend our personal beliefs about something. We must set aside our prejudices and then think with an open mind. Learning most definitely is the roadmap for knowledge, but mistakes, they are the highway for wisdom. Wisdom requires courage. And the great Robert Louis Stevenson once said, you cannot run away from your weakness. You must fight it out or perish. And if that be so, why not now? Folks, wisdom is born of mistakes. Confront error and learn. My approach to life, it's pretty simple. I would never ask you to do something that I would not ask of myself. So as we approach Thanksgiving, which is a time to give thanks and a time for gratitude, and I am absolutely grateful for the opportunity to serve you. See, without the opportunity to serve you, without what Maria Montessori called mistakes, learning opportunities, my growth would not have been so massive in 2013. It's really coming towards an end out here with it being November 26th already? The idea that all wisdom comes from learning from our mistakes provide us traders with the opportunity to learn on a pretty consistent basis. Wouldn't you agree? At least it has for me. The idea that to become wise means that we must suspend our beliefs about something is what's allowed me to create what I believe is the most important trending tool for me in my trading. I hope it's going to impact your life as well. You see, I was able to suspend my beliefs about volume. I was able to suspend my beliefs about AB equals CD patterns, about bullish and bearish reversal signals out there, about buying the bottom or selling the top, and so much more. Folks, wisdom is born from mistakes. Confront error and learn. Utilize Thanksgiving. Write down all the things that you're grateful for or that you could be grateful for in 2013, folks. It is very, very close to not just Thanksgiving, but thanks living out there. So let's go check out these markets here right now. Then we'll go take a look at whatever mistakes we can find that Stevie's son made in 2013. Right now, pretty flat markets out here. Dow futures are off about 6 points. I'm not even sure fair value, I think, is down about 18. So the Dow opens up maybe 10 points. Pretty flat market out here. S&P is off about half a point, trading out at 1802. NASDAQ futures up nearly about 2 points, trading out at 34.31-ish or so. Not a ton of movement here in the currency market. King dollar back 11 ticks right now, trading out at $80.80 out here. Kind of flat in the market. Light sweet crude out here. If we take a quick peek across the globe, Let's see, over in Europe, the DAX is flat, down 31 cents. FTSE off $30 out there. In Asia last night, really a flat market. The Nikkei was off 104 points, but we'll see if we take a look at that chart here. Not really that big of a deal out there. The Hang Seng down 3 points. The Shanghai off 3. Our call-in number, 877-927-6648. So what should we expect in the markets today? Excellent question. With it being a holiday, with it being wintry weather, with it being, cold and flu season, things like that kicking in here, I suspect that what we see is kind of a typical market to what we saw yesterday. But we'll go take a look at some prior Thanksgiving, maybe the prior 3 or 4. I think I've got them notated on one of my S&P charts. But let's take a look at what did occur yesterday in a market that wasn't necessarily so flat, and we want to keep an eye on it, and that is Goldilocks and silver. Now, gold, in the case of gold, had an outside day, key reversal type session yesterday as it was testing the swing point low from June the 28th. It was testing that low. It was doing it on lighter volume. It rejected it on price. It rejected it on volume. And it gave you a key reversal session. Now what you want to see is follow-through. We do not see the follow-through as of yet today. What would we need to see follow-through? Well, at least a close above 1250.80. But I suspect even more than that. In fact, let's go ahead and put one of the moving averages on my screen. Let's put the 8 period, 9 period. Give me a second here to go find out where do I have those moving averages. There we go. I think that might be the, let's see, that's the 9 period. 9-period exponential moving average. So let's go ahead and use that. That's the blue squiggly line going across my screen here. So in essence, what we can say is that yesterday, or this morning, I should say, in today's session so far, what price has done, it's gotten up to the that 9-period exponential moving average. That's the 1258 level, and so far has rejected price. So we haven't exactly seen a true breakout here of Goldilocks. Now we would if we were to see a close above that level. So let's call it about 1258, 1259, something like that. You're 1243. So if yesterday really was a key reversal session, that's what we would see. If not, well, then what we're looking at is likely a failure of this pattern and the larger pattern to prevail, and that's the A to B equals CD down. That's the confirmed A to B equals CD down, which would take Goldilocks down to the bottom of that June 29th area, somewhere in 1178, maybe even lower, like around the 1155. I believe that's the 0.618 retracement of the entire move off of the lows out there. So we'll see which one. We'll certainly be paying attention to gold and silver. In silver, really the same type of session here. Yesterday, it too had a key reversal session. The key reversal session, really 3 things need to take place. Number 1, market needs to be in extended condition. In this case here, if you just simply utilize the 14-period RSI out there, when it gets down towards that 30 level, it's oversold. Towards the 70 level, it is in the overbought type of condition. Well, in the case of silver, it was down in that 30 or lower level. So it certainly met that qualification of being extended. Number 2, you need to have a session that exceeds both the high and low of the prior session. And number 3, it needs to close just simply in the opposite direction of where that trend was coming from. Well, you had all of the above yesterday, and you also had a test of that June 28th swing point, the high of which is 1963. We tested it yesterday, got down to a low of 1957, closed back above it, had a little bullish engulfing candle as well to boot, but we're not getting the follow-through here today. Let's go ahead and put that same set of moving averages on my screen here. If you are just listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can always watch this, the live stream of this by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a button, 3 smartphones. Click on that, and you'll be able to see this show streaming live. And you'll see that price here, both yesterday as well as today, interest session, has stopped at that resistance of that 9-period exponential moving average. $20.26 is the number. So if we see it close about $20.26 today, you know what? That would be giving you some reversal signals here inside of silver. Of course, you'd like to see gold go along with that move as well out there. If we take a look, yesterday, let's go take a look at some of the intraday patterns inside the currency market. Yesterday, during yesterday's shows, we were taking a look at some of the different patterns out there. One that we showed here was on the euro U.S. dollar. We were showing how the euro was making a lower low, and it was doing it with less relative strength. So if you're watching us on Tiger TV, if you look at the bottom of my screen here, you can see that at about the time frame of 5:30 a.m., this is yesterday morning, the euro made a low of 1.35069 out there. As it was making that low, it was in the extreme oversold condition. Now it bounced, and then we saw the euro move lower. We saw it move lower. In fact, when we first started taking a look at it, it was probably right around the 9:30 time frame, 9:30 or 10 o'clock time frame. We were showing the divergence that was out there. Of course, I said, not so fast. We must get a reversal signal. We must get a bullish reversal signal before you could go ahead and fire away at a trade. We didn't get that right away. In fact, we got the bullish sign right here as we were coming off the air at 11 o'clock. I said, you need to see follow-through on that next session in order to take a long trade. We did not see that follow-through. We finally got the follow-through right here, I would say right at the close of 12:30 during that half-hour session. If you went ahead and blended, if you used a little blendy out there, and you blended the two candle sessions together, 12 and 12:30, that would give you a bullish engulfing candle, and then you would have had follow-through at 1 o'clock. Well, look what it did, folks. It gave us that reversal, and, of course, it did what it was supposed to do so far, which was make that 100% move of a move, get all the way back out. Now, this is a failed 0.786 Gartley sell pattern. We'll come back. We'll take a look at it as soon as we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Let's focus in on this 30-minute chart here for the Euro-US dollar. Let's show you that it's really not that complicated to be able to trade the currency pairs. Let's just simply utilize a couple of different tools out here that can help us in our trading, knowing what to do and doing what you know. Two totally different things out here. If we take a look at, we showed, I identified for you one set of divergent patterns here between price and relative strength here yesterday, just simply because, we were on the air live, and so we were identifying where is there likely going to be a turn, because it just simply, when you are pushing lower price and you're doing with less relative strength, it's just telling you, it's communicating that, guess what? The bears, the sellers, don't have enough oomph behind the move to keep pushing it down, and you're looking for some type of reversal signal. Well, if you're looking at this chart here, if you're watching us on TigerTV, is there anything else that sticks out glaring at you as price was moving down, where we also saw a price relative strength divergent pattern out there? Something that kind of just jumps right out at you? Oh, there is for me. Look, come all the way back here. When the euro was making, and by the way, the horizontal lines that you see on my screen out here, those are the primary trading range boundary lines. I've taken what Bud Rolsa has taught us, and I've gone ahead, I've automated that. I'm very close to having the full automation version of this on Ensign Windows. When I do have it done, I'm going to go ahead and provide it to you folks for free if you'd like, if you wanted to go ahead and test drive it. So I'm just trying to create the tool so that I don't have any support to go with it, so that it's pretty self-explanatory, and you just have to hit a few buttons and you'll be able to apply it to any chart, and you'll be able to actually use it for free for at least a week out there. Meaning that you can use the software, you can use the tool for as long as you want. I don't care. Once I give it to you, you can have it, you can use it, or what have you. You can apply it out here. But it's just simply a way to be able to identify horizontal areas of support and resistance. So the black line, the dark line that I've got on the screen right now, that's the largest number of co-located opens and closes in the screenshot that I used in order to be able to identify these primary trading range boundary lines. Now, if we take a look at the euro as it's making a low back here at 3:30 in the morning on November the 21st, I'll go ahead and I'll draw that pattern. And you can see here that it was also making a price RSI divergent pattern. We'll go ahead, we'll make this just a nice dark red line out here. So there's your price pattern with it making lower lows, and it was doing it also at the same time as it was making a higher low. When we take a look at the relative strength indicator out there, we'll go ahead and make that dark black line. Go ahead and make that a nice big thick line out there so that you can see that on the screen. What price was also doing was coming right down into a primary trading range boundary line. You got a nice bullish, this was a piercing candle right here. This candle session that took place at 3:30, you got some follow through on that very next session. As it was forming a nice low out there. Take a look at coming from the lower part of that relative strength indicator. And, of course, when it makes a high up here, take a look at this. Makes a high. This is in the trading session at 5 a.m. Now, it's a wide-ranging bar, 5 a.m. on November 22nd out there. Starting to get up towards a very toppy area, very over bought range out there. You've got to wait for a reversal signal in order to take a trade out there. But take a look at what actually happened out here. As this thing was also making a 0.786 Gartley sell pattern, take a look at how this thing was making this high from here, went all the way up, and it was making a higher high on less relative strength out here. When you had this little gap down that took place at 8 o'clock in the evening, that was on November the 24th out there. That actually was a reversal signal inside of the euro-US dollar on a 30-minute chart out there. So there's another RSI price divergent pattern out here, and it's so easy to be paying attention to and to wait. It works on all different time frames. These time frames here that we're looking at, just the 30-minute chart, because I believe that the 30-minute chart, for whatever reason, is really the best ECG, electrocardiogram of the market. Can't tell you why it works so well. I just know that it does. You want to be paying attention to it. So you can see this pattern here working time and time again. Now we see the euro pulling back here. It should find some pretty good support on its retracement right around that black horizontal line, right around the 135-ish range out here. We take a look at from low to the high that was put in. We'll also see that the 0.618 is the level that it hit right now, but that's the 135.20 area. But it's coming down to that 0.618 area with too wide of a bar out there. Now, it could reject this price and then move all the way up and form a hammer candle or something like that. That would be a different story. But it says to me that the euro ought to at least get down and get to the 0.786 retracement, test that black horizontal line coming across our screen out there at about the 135.06 level. Future's still relatively flat out here. When we get back, we'll go see how these markets are going to pop, whether they're going to drop. Give us a call, folks, 877-927-6648. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 19 points, trade out at 16,091. Composite trading out at 39.97. That's up 2 points. The S&P up 2 points, trading at 18.04. Russell 2000 up 29 cents, trading out at 11.25. Apple's up $3 and change. Google up $1.60. What a nice day Google had yesterday. Leading the charge, the upside, Workday. WDAY up 11% this morning, up $8 and change. Joseph A. Banks, that's up $6. They're fighting it out with the Men's Warehouse. They're also up $3 here this morning. The Blue Box Company, Tiffany, out with numbers. With some good numbers. They are, up 7% here this morning. Let me see what their numbers actually showed out here. They had Q3 profit was up 50%, so that was a nice move out here. Let's see what the actual numbers are. Earnings of $95 million versus $63 from a year ago. So I guess giving out those blue boxes, that is a good thing out there coming into the holiday season. Palo Alto Networks, PANW, is the ticker symbol. They're up about $3 here this morning. Also out with numbers here before the bell. Their first quarter loss widened, but went from $7.86 million versus $3.5. So I'll say that widened quite a bit. Total revenues $128 million versus $85. So good top line growth, but nothing on the bottom. Nonetheless, they are being rewarded here this morning. Voxel Jet, another little counter trend bounce here this morning, up $2.40. Kihu Technologies, they were down a bit yesterday with some decent volume, but they've got some support out here. They are up about 3% here this morning. To the upside, you've also got Sarepta Therapeutics having been ripped apart. That's up $1 here this morning. That's up 6%. Baidu to the downside. Leader in the clubhouse to the downside, off $3 and change. DSW, the shoe company out there, I believe they were out with numbers as well. They had net income of $55 million versus $50 million. And the revenues, $632 versus $592, but must be a guidance miss out here. They are trading down about 6% here this morning, off about $3. Green Mountain Coffee Roasters down about nearly 4%, off $2.50 out here. Canadian Solar, CSIQ, that's off 6% this morning. 21 ViaNet Group, VNET, off 9%. Nuance Communications, NUAN is a ticker symbol. They were out with numbers after the bell last night. What did they report? The loss of $32 million versus $117. So, hey, at least they're getting their loss a little bit under control out there. They are trading down. Randgold Resources, GOLD, that's off about 2% this morning, trading out at 67.78. Our call number 877-927-6648. Let's just kind of expect a choppy market out here, but let's go take a look at the 120-minute charts for the for what? Let's go first take a look at the Dow. So here's the 120-minute charts on my screen. The black, the horizontal lines that you're going to see on my screen, folks, those represent the primary trading range boundary lines. They're areas of horizontal support and resistance. You can see how as price makes it through one level, It goes up and it tests the upper level, moves back down, tests that area for a while, decides that it wants to go up to the next floor. Much like riding an elevator out here, goes up to the next floor, says, I need to stop there. Kind of like we had the composite yesterday get to the 4,000 level. The mere fact that it got to 4,000 and closed underneath it, that was not a rejection. That was nothing more than getting up to the next level and needing to, build a little bit of a base. Might just be a base for a few hours, a few days, whatever it is. If you take a look here at the Dow, you can see these primary trading range boundary lines that are drawn on the chart, automatically done just by a quick couple of button touches here. And that's a tool that I want to be able to. It is Thanksgiving time period, so I'd like to be able to provide that tool for you. It'll aid you in your trading out here and making your trading decisions. What we can see here is we blow up the Dow. You can see it's up above. It's next on the 120-minute chart. It's next primary trading range boundary line out here. Not that this area can't be tested, which is the 16,000 mark. Geez, how about that? Right around the 16,000 mark also is a primary trading range boundary line. So as long as that area gets holds, nothing bearish about that. What you can also see is the diagonal, the price channel, the rising price channel. This is a shorter term one. It's 120-minute chart, so it can be shorter term. It's coming off of the lows here in 2009, in October 9th, I should say. So October 9th, that is where we begin the rising price channel out here. So you've got that black. We could change that to red. Let's just change that to red. Maybe that would go add a few more colors to our screen out here. So that 16,000 area, strong level of support for the Dow. That says at the next level up on the 120-minute chart, we should be looking for a move up to about the 16,239 unless it breaks this rising price channel, which it has not done as of yet. All that we've really seen out here, you can see as the Dow gapped up on a Sunday evening, what did it do? It moved into that extreme overbought condition. And just like many of us will experience on Thursday, we'll get in that overeaten condition, and we just simply have to work it off by letting time just pass. That's really all that took place out here thus far in the Dow futures. It just simply worked off that overbought condition by moving sideways, with price moving sideways out here. Right now, it's neither overbought nor oversold. But the bears during this time period, when things get overbought, that's when the bears have the best opportunity, the single best opportunity to go ahead and push prices lower. And thus far, they have not been able to do that. Just like when things get into the oversold level, it's where the bulls have the best opportunity to try to push prices higher. And in essence, that's what they have been doing inside of the Dow futures, most certainly since October the 9th out there. Let's go see what's going on inside the other future. Let's take a look at the NASDAQ futures. Here's the 120-minute chart. Now, here's the primary trading range boundary lines being put in there automatically. I didn't put these in here. The system goes out and calculates where the largest number of co-located opens and closes are. That happens to be right here around the 3376-ish range. That's the dark black line. Let's change this one to red as well. The rising price channel out here. Now, what we can see is that price bumped right up into the 3,400 area of the NQ out here. You can see also inside of the overbought zone, just simply moving sideways out here. Now, it hasn't broken above that level. You need to see it break above that level in order for it to rise up to its next floor. Its next floor inside the NQ, right around the 3490-ish type range out there. I suspect that's really what it wants to do. And until we see this rising price channel get broken, all is okay inside of the NASDAQ futures out there. We take a look at the ES Mini, the S&P futures. Here are its horizontal primary trading range boundary lines. You can see that the most recent one that it broke through right around the 1791-ish level. We've got an A to B equals CD to the upside. That should complete right around the 1820-ish area. That would just simply be, now that would be your 1-to-1 A to B equals CD. If in fact we do see the ES Mini move up, I suspect that what we'll see is a larger move than that. If we take a look at the retracement, let's go see what that retracement is. Well, okay, now 1-to-1 would make sense. It's pretty close to a 0.618 retracement. 1772 is the magic number. Got down to 1774 out there. You can see the rising price channel. That's coming off of the October lows out here. We'll go ahead and make that one red as well. That area has been broken a couple of times, but the most recent period was back here on November 20th. Price got back inside that level. So the ES Mini is telling us that it wants a higher price out here, right around the 1820 mark. That's on the, let's take a look at the Russell 2000. That was on the ES Mini. These are all the 120-minute charts out here. You can see that the Russell here is come close to bouncing up into its next upper boundary line, right around the 1129, 1130 level. It's been as high, it's traded as high as 1128.60, so that actually works for me. So it's just simple. Let's put the relative strength index on here. Let's go see what that was doing. You can see here as it approached that level, what was it? It was overbought. So it just simply has been really working sideways to work that condition off. Again, you get to an overbought level, that's a time when the bears ought to jump on board and really push the market lower. When they can't, that has got to make you stop and say, something to think about. So that's what's going on inside the 120-minute charts out here. Let's go take a look at what's going on over the larger time frame. I said that the best learning experiences, folks, they are born from mistakes out there. When we started the show, the theme of this morning was wisdom is born of mistakes. And so I don't know about you, but I know that when it comes to trading, I've made a mistake or two. I'll continue to make mistakes or two, but really it's all about going back and being able to say, what did I miss? What did I miss? What could I have done differently? And that means, in my opinion, that means you need to discard all of the baggage that you brought with you, all of the tools that you brought with you, and just step back and take a look at it and say, is there something else that you can see in the marketplace that maybe you could learn from? And that's really what led me to say, you know what, I'm an expert at taking a look at the lightning bolt pattern. A to B equals CD. There's very few that are better than I am and about being able to identify why, because I've really studied that C to D. I've made it my goal to master that C to D leg and be able to step back and take a look at things that I didn't realize at first when I was taught. Because, when you just learn a pattern out there, you think, okay, all I have to do is learn that pattern, and then you can go ahead and trade it. So I don't know if you've ever experienced this where you've bought and sold a pattern because it completed only to find it actually fail out there. And it's from that failure, right, that you want to be able to learn from. And that's how I began to master that C to D leg out here. Well, that's not what this is all about. This is about being able to say, everything has its place, but why is it that maybe I missed out on a trade? Because, you see, the trend is absolutely your friend. And if you can discard the belief or the desire to buy the bottom tick and sell the top tick, and know that there is a ton of money that you can make by just simply identifying when the trend changes out there. And the key is, how do you identify when the trend changes? And that's why I've spent so much time, so much energy, so much money being able to develop a system that works on all time frames, that works for all time periods, and it means for the different type of trader that you are, you want to understand what the different trends are. At least one level up and perhaps one level down, because, if you are a longer-term trader, meaning you're just simply managing your retirement funds out there, you most certainly need to know what's going on inside a weekly chart. Now, a daily chart's going to change quicker, right? It's going to change quicker. You're going to see a signal quicker. You may or may not want to react on that daily signal. You've got to see what actually, maybe fits your temperament out here. Well, here's the S&P 500. And the S&P 500, when you're taking a look at my screen out here, when you take a look at the dark bluish or purplish area, that's telling you that is you've achieved a buying opportunity. Now, it's either a buying opportunity or it's a counter-trend rally. Well, it makes it pretty easy in the marketplace, depending on where the price levels are that you are at, to determine which of those you might have. But I'm not going to go through that right now. When you get to the light blue area, that's telling you you've got a real strong bullish move that's going on. When you get to the yellow area, it's nothing more than a caution sign. It means, we really should be tightening up your stops there, because when you get to the caution area, that's when you can go into a sell mode out there, a sell zone. You can't do it from a light blue area. At least I haven't seen it occur here just yet. And right now on the daily chart inside of the S&P 500, you can see we're in that strong bullish camp out here. If we take a look at just simply signals, the last time we saw a reversal signal, and those are important to understand where there are reversal signals on the daily chart. That came in on November 18th, the high of which is 1802.33. You're trading at 1804.16 right now. That becomes an area of support. Hey, even if price moves below that, that doesn't mean, hey, time to sell the farm and time to necessarily go short out here. This is where, no matter what beliefs we might have about the market, no matter what we believe about what the Fed is doing or isn't doing, what we really want to know is what's going on inside the chart pattern. What is going on inside the chart pattern, and what are the bulls and the bears communicating to us on a continuous basis. And so if we switch over from the daily chart, because the daily chart says, hey, guess what? We're in strong bullish fashion, bullish mode out here. Yesterday's market, that didn't change anything. If we go take a look at a weekly chart out here, we take a look at the weekly chart and the weekly trend out here, and if you come back and we take a look at, let's widen this up a bit, and you come all the way back to November of 2012. That was the last time we had Thanksgiving out here. I believe it was November 22nd out there. And take a look at this market on the long-term chart out here. Since that time period, folks, and obviously, we can see, look, you already know this, but here's what this tool that I've created certainly shows you and certainly shows me, is that we've been in strong bullish mode. In fact, this is the strongest leg of the market since March of 2009. That's how strong of a mode that we're in right now. So it's going to take something significant, and not that it can't change. It can change overnight. I accept that. I know that. But what I also know is, what is it that's going on right at this very moment? And what's going on right now at this very moment on the weekly chart is that the S&P 500 is in strong bullish mode. It has been in that strong bullish mode. Well, really got into the super strong bullish mode right here in January 18th of 2013 out here. So this is a heck of a run. At some point in time, that run will come to an end. And if we take this back, let me see, how far back can I take this weekly chart? I can take it back pretty darn far, I believe. So only have 1,825 days in here. Let's go take this back 4,000. Well, that's a weekly chart, 4,000 days. Let's go see if I do that, and we'll take this to the backside. We'll probably get back into the 2007 time frame out here. Yeah, so here we are, 2007. Now, 2007 on the weekly chart, you're going to see a bearish sign, that's for sure. That's where we saw that little bearish engulfing evening star. We come back, we'll take a look at the 2007 time frame. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 25 points. S&P is flat. It's up 80 cents right now. Composites back 77 cents. Russell 2000 up 57 cents out here. So really a flat-ish type of market out here. Volume is going to be low today, going to be even lower tomorrow, and then the market's going to be open for 3.5 hours on Friday. For all of you that are traveling, be safe out there and be patient. If you're flying, I think there's going to be quite a few delays. If you're driving, be careful because of all the rain, slick roads, and and all the people that drive and look at their phones. Don't just put your phone down. You don't need a text. Just wait till you get to wherever it is you're going. All it takes is just about 2 seconds of somebody changing their mind in front of you, and next thing you know, you are sitting on their rear end, and so you don't want to do that. Now, we're taking a look at this little tool here that Stevie's son has built. And, what I've identified out here, you've got all of the different potential bullish or bearish candles. We're looking at the highs out here in 2007. So from a long-term standpoint, if you get over the need to try to sell the top tick or buy the bottom tick, what you want to do is you want to get the trend right. You want to see when the trend changes out here. This is a weekly chart. So on a weekly chart, you're going to see a trend that's going to change slower than on a daily chart. In the candlesticks that I would be paying attention to or we should be paying attention to always, you should be paying attention to these hammer candles. In the case of the S&P 500 on the weekly chart, it formed a hammer candle. That was the week of August 31st, 2007. You know the expression, if you get a close below a hammer, if you're long, you're wrong out here. Well, we didn't get a close below that hammer candle until the week of January 4th, 2008. Boy, once you got a close below that, that was a real indication that a trend was changing. Of course, the other indication was we went from a buy mode right to a sell mode. We went right through the yellow light out here, meaning there was no yellow space in between these two. It was immediately right to a sell zone. You're taking a look at two lines that are on my screen. One's dashed, one is a solid. Boy, once you see the solid line dip below the dashed line, that's another indication out here that the trend is changing. So, hey, look, maybe you didn't sell the exact tick at 1572. Instead, maybe what you did was you went ahead and you went to cash inside your position right around the 1415-ish range out there. How would that have saved you throughout 2007? These blue areas here, once you start to get into a sell zone, these blue areas, these dark blue areas, they tend to be counter-trend rallies inside of the system out here. So how would that have helped you to have had this type of system for your trading out there? So if you've got some interest in it, go check out Mastering Probability, folks. You can teach folks how to use this, how to create this, you can do that by going to the homepage at TFNN.com. Just click on my name, Steve Rhodes. You'll be able to access it, 30 days, unconditional money-back guarantee. What better time to start learning about these tools than this weekend when you've got some free time, when you're just kind of sitting around, maybe relaxing because you're not out at the stores shopping. Let's go take a look at some of these stocks here that are popping and dropping. Oh, we only have a minute to do that. How about that? Let's go take a look at the Blue Box Company. Let's go take a look at Tiffany. Let's go see what it is doing. It is trading up $6 and change right now. Gapping up. Has got some nice volume behind its move. Looks like it's taking out a swing point. Looks like it is trading. Yeah, it's up at, looks like all-time highs out here. Volume behind the move here so far, 1.7 million shares out here. Taking out the B point of an A to B equals CD up. That only had 3.2 million shares, so it's doing that without any problem. Look, folks, if you're off to start your Tuesday, have a terrific Tuesday. If you are taking off for vacation, be safe out there. I will see you either tomorrow morning, 9 o'clock, or whenever it is that you're back from vacation, or maybe in about 8 minutes or so when we start the Money Masters show. Have a great Tuesday, folks. Thanks so much for joining me. Take care.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.